In today's video, we'll be covering some of the latest developments from the P2P lending industry, which may impact your return as well as risk on particular platforms. We'll review the current cash drag situation on Puberty and reveal which regulated platform generates the highest interest rate for investors. We'll also analyze the portfolio performance of some of the best and worst platforms in the industry. Mintos, Puberty, and Estate Guru remain the largest platforms in terms of loan assets under management. Mintos is the market leader with over 640 million euro of investors' funds invested in loans. The platform managed to increase its outstanding portfolio while simultaneously decreasing its funds from suspended lenders by about 1.4 million euro compared to the previous month. Currently, close to 20% of the platform's portfolio is not performing as expected. The reported funds in recovery are the sum of pending payments and defaulted loans. For more information about the platform's recovery progress, you can review the overdue table, which gives you an idea about the expected recoveries from suspended lenders. Investors on Mintos should know that lenders come and go all the time. Some leave the platform quietly without any issues, while others get suspended. If you are considering joining Mintos and investing in loans, I recommend selecting lenders with the best risk and return ratio, as this will significantly reduce your default risk. To figure this out, you can head over to our Mintos review, scroll down to the loan originator section, and have a closer look at the lenders with the best financial ratios. You can cherry-pick lenders with decent financials and review the underlying country risk with the help of our country risk data hub. After shortlisting the best lenders, you can review the average interest rate directly on Mintos. If it fits your risk profile, you can add them to your custom investment strategy or invest in the available loans manually. The data on P2P Empire will help you to determine the platform risk based on the platform's overall portfolio performance, the lender risk based on the lender's latest financials, as well as the country risk based on macroeconomic variables which evaluate the lending risk in specific markets. This strategy works best for P2P marketplaces such as Mintos or Puberty. When it comes to the aspect of platform risk, Puberty belongs to the top platforms with the highest amount of funds under management and no loans in recovery. This means that investors on Puberty don't have to deal with suspended loans or pending payments. While Puberty is a very reliable platform, it also has its downsides. The supply of loans cannot match the demand from investors, leading to cash drag. Some investors report that over 60% or more funds remain uninvested. This is not the only bad news. The interest also keeps dropping, meaning less yield for investors who manage to deploy their funds. While Puberty continues to onboard new lenders, the funding volumes for those new entities remain rather small, far below the demand from investors. If you are looking to earn the highest yield, you certainly won't be happy with Puberty. Instead, you can head over to our lender hub and cherry-pick other lenders to invest in. Suppose you like Puberty's approach to risk management. In that case, you may also want to explore another platform operated by the same team, Crowdpeer, which has built a solid track record with low default rates and certainly higher interest rates. Crowdpeer investors earn between 10 and 11% per year, and the loans are backed by a first-rank mortgage. Moving on to Robocash, where the outstanding portfolio saw a slight increase last month. This cannot be said about Escated, where the portfolio value dropped by 7%. Currently, the investment opportunities are rather limited with available loans in its lender Spanda Capital in Spain. Inento continues to perform well with very fast funding times. Swopo released its portfolio data recently, reporting a decline in funding volumes compared to the summer months. The platform also reduced its interest rates to cut funding costs. Its main lender, Vandu Finance, also released a report for the second quarter of 2025, highlighting a stable loss rate and slight growth in revenue. While the lender operates in multiple markets, it only publishes consolidated financials, which you can access directly in the loan originator section of our Swopo review on P2P Empire. There has not been much news from Fintan recently. The platform grew by roughly 2% last month, currently offering high-yielding investments in its development projects. Indemo has surpassed 15 million euro in outstanding portfolio amount. The platform reports a 23% average return on 11 sold debt so far, which is good news for investors who don't mind committing capital for up to 2 years. The platform continues to run its cashback promo. Investors who register through our link on P2P Empire can get up to 3.5% cashback bonus until the end of September. Afranga has been the fastest growing platform this summer. It has grown its portfolio to 14.5 million euro, offering attractive yields for its loans in Lendivo, a Bulgarian lending startup. Nectar is also growing steadily. Investors earn up to 14% by investing in loans from Moldova. If you are more sensitive to country risk, you can explore Romanian loans, which come at a 12.5% yield. The income marketplace decreased its funds in recovery, which are funds with the investment status buyback initiated. Additionally, the platform onboarded a new lender, Simpleros from Spain, which presents decent financials at an attractive rate of 13.2%, which most likely won't last for very long. Landa is another platform with stable loan book performance. The default rate hovers at around 8% with decent supply of loans that yield about 10 to 11% interest per year. When it comes to the platforms with the worst portfolio performance, we can highlight EstateGuru and Genius24. EstateGuru managed to slightly decrease its funds in recovery in non-active markets by about 800,000 euro compared to the last month. Genius24, on the other hand, no longer reports anything, which decreases the likelihood that investors will ever see any of their 26 million euro again. The remaining platforms don't offer many insights into their portfolio performance, so investors should approach them with caution. So that's been a quick update from the industry. The good news is that all the platforms in our list report a relative reduction in funds in recovery this month, which is really rare in the industry. At the same time, you should know that not every platform reports the data, so we don't really get the full picture. While this video gives you a good idea about some of the platform risk-related aspects, note that P2P lending remains a risky business. Some platforms may have a great track record. This does not, however, mean that they offer the best and least risky investments right now. We all know that well-capitalized lenders often leave the P2P lending industry as they can get cheaper funding from elsewhere. This means that those companies are replaced with new lending startups, often from developing markets with elevated risk levels. So if you found yourself investing in loan originators, don't just rely on the platform's track record, but look deeper into the financial trends and country risk to better understand the risks that you are taking right now. Additionally, P2P lending should only be considered if you have a well-diversified multi-asset portfolio. Being overexposed in P2P loans may not be the best strategy in the long run. So that's all I have to share with you today. If you found this video helpful, hit the like button and subscribe to stay updated on what's happening in the industry. Thanks for watching, and I'll catch you in the next one.